Deven Choksey is with us with a quick check on things and what he's making of it. Deven, good morning. Good to have you here. I don't know if you have a comment on the pharma space on the back of the Novo guidance cut last night. If you do, please weigh in. Otherwise, I think the big story, of course, is L&T's very strong accretion in its order book.
Yes, Prashant. Good morning. I think the visibility in the order book is something significant for L&T. And I think this quarter's result has also been an outstanding one for a long period of time. I think L&T hasn't produced this kind of result. I think that's a confirmation that larger the order book size, and the ability to deliver is giving them the better handle on the markets in the business. I would imagine that they continue to hold the size of the order books, visibility for at least 2.5 to 3 years, next 5 years as well, because of the amount of demand for the construction, including from the UAE segment that they are having, is quite a significant one. So that's where probably one could possibly argue for a steady to better growth going forward as against the muted growth in the past.
Deven, hi, good morning. We've got two decent earnings, good numbers coming in from both GE, Vernova T&D and L&T, both in the infrastructure and old economy capital goods space. Do you like either of the stocks?
Yeah, certainly. Good morning. Well, L&T, as I said, looks promising from a point of view that it is creating a very large visibility of order execution for next 2.5 to 3 years at current levels. The more important part is they have stabilized on the margin, which was not the case in the past. And that's where I believe that going forward, if this strategy works for the company on managing the costs along with the higher growth, probably the results are likely to be relatively better compared to what we have seen in the past. So remain cautiously optimistic about the prospects going forward. Of course, in some quarters when the market gives you the price correction, that would be a better time to buy into this stock.
Deven, it's been largely a subdued, lackluster earnings season. Not too many big hits, but pick out something for us. Last 4-5 days, any company, mid cap, large cap, small cap, where you were very pleasantly surprised with the numbers, and if it makes sense to buy any stock.
Well, the importantly among the finance companies, the Bajaj Finance and Bajaj Housing Finance, both these companies compared to the peers have shown at least 2.5 to 3 times higher rate of growth, and that is what is more important to understand. Of course, we have been calculating that possibility, but importantly, when the peers are facing the pressure in the marketplace, these two companies have been showing relatively better performance. Maybe their ability to deliver the loan faster to the end customer and process it, in the best interest, probably, giving them the advantage which no other players are, enjoying at this point of time. So we look forward to, such differentiators in the marketplace, while building the portfolios.
One other space, Deven, which was buzzing and how was chemicals, right? And this is a kind of new story, not that new also, but it seems like China is pulling back seriously on a lot of capacities. Because, there's just too much price competition within China, right? And chemicals is one area which people like Morgan Stanley, etc., highlighted. We put out that note, Morgan Stanley double upgrading their view on Tata Chemicals. But it was not just Tata Chemicals. The stocks will come up on your screen. Tata Chem was up sharply, Sharda Crop Chem. Some of them, of course, are based on individual result reaction as well. Deepak Fertilizer, Zuari, Granules, Dhanuka. Of course, a small name like Paradeep, of course, on the back of earnings. But that entire pack and more was buzzing with lots of vigor yesterday. Any thoughts, anything you like here, Deven?
In the specialty chemical space, many companies have actually shown respectively, a higher performance, largely because of two reasons. One, on the input side, the cost factor has remained under control, and either because of the China factor or overall improvement in the conditions. Some of these companies have actually started showing relatively higher amount of offtake and the revenue. So both the volume-led growth as well as revenue-led growth is coming up, for price-led growth is coming up for these companies in current times. In my viewpoint, if I have to put across one summary, I believe that given the situation when the cost is under control and the demand situation is on a buoyant side, probably this period of next 4 to 6 quarters would be, I think, a super quarters for most of the chemical companies, and particularly the specialty chemical companies who are actually supplying to even the pharma segment apart from agrochemical segment. So we remain, I think, relatively more positive on their prospects as far as those companies are concerned.
Okay, Deven, we'll leave it there. Quick chat, but useful as always. Appreciate you joining us here on CNBC TV 18. Let's